Well, we have Memorial Day weekend coming up. We're about to tip into summer. And for the very first time, the city of Austin has now eclipsed 1 million people. But here's the thing: Austin right now is actually one of the slowest growing cities in our metro. So, which are the ones that are actually growing the fastest? Let's take a look. Well, this is the news that came out last week from the Census Bureau. The city limits of Austin has now officially surpassed 1 million people. But in the data, what it shows is Austin grew about 4,000 people last year, which really is less than 1% growth. So the city limits, you're not actually seeing as much growth. I'd say Austin is kind of holding steady. So, where are the parts of our metro that are growing the fastest? Well, this was from the Wall Street Journal last week. And again, looking at census data, this is looking at cities that have at least 50,000 people. Well, Georgetown, Texas, up north, one of our big, fast growing northern suburbs. Back in 2020, it probably had 60, 65,000 people. Now it's probably sitting around 115,000. So it's grown over 50% in just the last 5 or 6 years. Leander right up there with it, and also Kyle to the south. So, north, northwest, south, all the suburbs growing, our big commuter corridors. That's where we're seeing a lot of growth, but they're not the only ones. Our fastest growing by percentage is actually Hutto. Hutto is northeast. It is just east of Round Rock. I'm sure you've heard by now of the big Samsung data center that was built out that way between Hutto and Taylor. They're getting a lot of growth out there. And of course, a lot of the home builders are in these markets: Dripping Springs, Liberty Hill, Manor. Dripping Springs would be a little more on the high end. They have a median home price above kind of the market average, but Liberty Hill, Manor, Hutto are where affordable homes are being built. Liberty Hill can get a little expensive too if you buy some land, but those are where we're seeing the growth. If I scroll down here, it'll show it to you a little more in a chart. Here we go. Fastest and slowest growing. So 20,000 and above, Hutto growing 7.9%. Over the last year. Manor 6.5%, Georgetown 5%, Round Rock 4%, Leander almost 4%. So those are really where we're seeing the fast growth. If you look a little smaller, 10 to 20,000 people: Liberty Hill, Dripping Springs, Elgin, Bastrop, and Lockhart. And then, of course, we've got some of the little towns around Austin that aren't quite Austin. They're really more country towns within an hour. But you've got Gerald, Nolanville, Bertram, Thorndale. The decreases are mostly landlocked areas that are also a little higher in price. So Sunset Valley, Bee Cave, Westlake Hills. Cameron's a little farther away. It's Milam County, kind of a country town. Same with Mountain City. But if you look at the ones in the metro that are, let's say, staying put, I think they're just more expensive areas, and they're landlocked there. All right, let's look at the market. So where are we right now? This is still looking at April data, but I'll blend it into May as we get near the end of May here. But as of April, pending sales and volume were up. So we are seeing that. We are also seeing the number of listings coming down a little bit. I like to see that. So where are we on price? So this is looking at the last 3 years. The black line at the bottom is this year. So right now we're marking out around 445,000 as a median home price. We started the year around 410, but look at what happens every single year. That's really where we need to be looking as we move forward, both as buyers and sellers. Where do we peak out every year? Right now. So we might have even peaked already, because if you look at May, the last 2 years, the prices were a bit lower in May than they were in April. So every year, spring buyers, they come out, they want to buy a property for the summer. So if you want to close by early summer, you needed to have gone under contract probably in March or April, close in April, May, or June. That's kind of the idea. So if you're a buyer right now writing a contract in late May, you may not close until late June or even July. So you're starting to get to the point where maybe you're not buying a house for the summer at this point. You're moving towards the fall. It seems early to say that, but that's how it works, just because of the timeline. So every year, pricing tends to kind of peak out with the early spring buyers, and then the later spring buyers, because there's more inventory and maybe a little less urgency, you see the prices start to soften. And then, of course, over the course of the year, the price just continues to soften back until we get to the very end. You get a little pop at the end because you have people that need to buy and sell before the end of the year. You get a little weak demand push at the end of the year. That always happens. But I expect we may have already peaked out this year. And if you look 2 years ago to now, our median home prices have probably dropped 20, 25 grand. in that time. And I don't expect we're going to see these lines cross over each other until we see either interest rates meaningfully come down or we see the supply meaningfully come down, which creates a little more supply and demand balance. This is looking at the historic sales price trend for the last 5 years. And you can see we peaked way back in 2022. That was the big COVID push. Since then, the peaks every year have come down a little bit. If we look at June 2023, we're about 475. If I look at May 2024, about 453. If I look at April 2025, about 446. And right now, sitting around 440, 445. So every year, the peak has come down a little bit. The real question is, what's our tail going to look like for the rest of this year? Is it going to mirror all the other years? I would say for now, the answer is yes, unless we see something change in the data trends. Here's active versus sold listings. Here's maybe a slight bit of good news, especially if you are a seller. So we have had just an overabundance of supply. And when you have way more sellers than buyers, sellers have to offer concessions. They have to lower the price. The prices got too high during the pandemic. They've had to come down. But the buyers are starting to buy. That's a good sign. We're seeing, April, we had 2,900 last year. In June, we had about 3,000. So I expect we're going to see more sales this spring than we saw last spring. We might even have some more sales over the summer, a little bit more. But more importantly, right now, we're sitting about 13,600 single family homes for sale. Still a lot. However, if I go back to June of last year, we had almost 16,000. I don't expect we're going to get to that number this year. So I think we're slowly seeing the supply maybe cross or crest the peak and starting to ever so slightly tighten up. May take a bit of time, a couple years, but I think we're starting to see that. That is a good sign. This is a not so good sign. So we had a lot of hot inflation data last week. Of course, the oil prices continue to stay high because of the things going on in the Middle East. So right now, our mortgage rate's the highest it's been all year at 6.65%. Pretty much all the rates at this point are now above 6%. So that is putting some pressure on buyers. If we look at the 30-year fixed rate, this is going back to late February, right before the war in Iran. We were looking pretty good. We were like at 5.99% and feeling like finally, that was the first time in 4 years we had seen rates dip below 6%. But then the war breaks out and boom, rates shot up pretty quickly within a couple weeks, or I guess say over March, shot up to 6.6. But then, of course, some of the fighting stopped. We thought maybe the strait would get opened up. So we saw rates kind of decrease a little bit. But then, of course, oil stays high, inflation stays high, new hot data comes out, and here we are, rates are pushing back up. So if you are a buyer, you probably already know this information, but if you are a seller, you need to be aware this is pressure against our buyers and their mortgage rates. So pay attention to that. The good news is I think if you're a buyer right now, we're at peak inventory. This is the most housing you're going to get to look at all year. There will be more listings. There are more people going to be selling their homes, but as a pile, I think that pile is slowly going to start to work its way back down as we get towards late summer and fall. If you are a seller right now, you need to be aware we may have peaked on price already. So now it's going to be very important to understand the supply and demand balance is going to swing a little more towards the buyers as we get into midsummer because there's less pressure to buy with those buyers than there was the March, April buyers who really had to hit a date, get a house for the summer. The people midsummer, they're on vacation, it gets hot. They tend not to have as much pressure there. So pay attention to that as well. Hope you can follow these videos each and every week. Make sure to check out our YouTube channel at Ryan Kelly Group. You can click that subscribe button. And of course, if you know anybody looking to buy, sell, invest, or finance, we would love the opportunity to chat with you. And hope you guys have a great week, a great Memorial Day weekend. And we'll bring you another update next week. Thanks.